everyone, welcome back to the market update featuring by Rationale and MarketsAll. It's the first video of 2025. In today's video, I'll walk through the major investment themes for 2025. In this video, I'll try to cover everything from Trump's policies to Federal Reserve, like China's economic challenges, current ongoing economic challenges, crypto markets, AI, and some other technological, potentially technological side developments. And I'll show you related charts for each topic while I'm on that chapter. I'll try to show you the perspective technically. So yeah, let's dive in and uncover the potential opportunities and risks. That's also as important as opportunities. And you need to watch for the year ahead. Those are the main themes and risks that will shape market pricing in 2025. So here, one of the biggest uncertainties here, first of all, in this slide, you see Goldman Sachs potential scenarios, like base scenario and risk case situations for post-election policy changes. And you see, for example, in the base case, the trade is expected, tariffs on China is expected for sure. If let's say new tariffs is up to 60%, that's another issue. What might immigrant issues, net immigration slow to 750K in a year, response to increased funding and tighter enforcement? What might be the impact of immigration policy? Because as I mentioned before, Trump's agenda, we know the agenda, but the sequence, what will be the what he's going to do first, or what will be the strength, what the level of those agenda is uncertain, and that brings uncertainty in the market that. So that's why we need to watch closely the news and stuff about tariffs and stuff, because if we receive smaller tariffs than we expected, we expect that the economy will be disrupted less compared to the first case. So it's if tariffs case, there's a potential for higher import taxes, and their impact on global trade is an issue. So another issue is tax cuts and deregulation. What's deregulation? In order to improve, let's say put some technological enhancements to move fast, there's a deregulation in the agenda, and with that deregulation, things will move more fast. And while these issues could boost US growth, the implementation still is uncertain. I mean, how is this going to be implemented? Because in a different way of implementation, we might see different impact on different sectors, or on different countries, different currencies, And one other thing is immigration policies, possible disruption to industries reliant on labor. Just in the case of a huge mass deportation of immigrants will decrease the labor supply, and decline in labor supply will push wages higher. And with the increasing wages, prices would increase, and that's called wage price spiral. And wage price spiral was one of the major focus back in the fight in the inflation. As you know, let's say in the first half of 2024, inflation was watched being watched much more closely than now, as there wasn't enough progress and stuff, and wage price spiral was one of the major topic at that time. So these uncertainties at the same time coincide with expectation for a stronger US dollar, driven by the relative strength of the US economy and the anticipation of Trump's fiscal policies improving US financial conditions. Remember that if tax cuts and stuff will come, there should be another way to finance government expenditures, and that will, in that case, there will be more government debt. So with more government debt, there will be more supply of treasuries. With more supply of treasuries, the price of treasuries comes down, and like the yields goes up. And this also is the main reason with this expectation we see higher long-term yields. A stronger dollar presents a mixed picture. There's like opportunities for US indices may outperform, with large cap sectors like tech and AI benefiting from the narrative of this, like lately talked a lot, this American exceptionalism. And what the risk side is, emerging markets could face challenges as the cost of servicing dollar denominated debt increases. Additionally, dollar strength may pressure commodity prices like oil and gold. For investors, keeping an eye on these dynamics can like uncover both risks and rewards. With all these in our minds, we should first like the related charts are like US 10-year yields, or so-called TLT. TLT is US like long-term 30+ years government bond prices, government bond ETF. So if we see an increase on that chart, that means we see decrease in yields, and vice versa. And the dollar index is another thing that we need to watch, and like potential impact of those fiscal policies on global indices. You could watch ACWI. Now I'll just quickly go through those charts. Let me yeah, here you see TLT chart. First of all, there is not like a clear chart pattern that I see right now, but there's apparently like a potential consolidation here. So I was watching this this chart. Oops, sorry. I was watching this chart to form an ascending triangle chart pattern, but it didn't happen. So for like the current situation, by the way, this is a weekly chart. As you can see, like both red line, which is 10-week moving average, and the black line is 40-week moving average. I mean, both directing like a downside. Maybe we can see some consolidation around here, but I don't see any return here right now for the time being. The main reason of this, like this long-term yields are going up. The main reason is that the uncertainties that I've been mentioning in this chapter. So what else? The XY. Let's check the XY. Weekly chart. I'm following this rectangle chart pattern. A breakout occurred and pulling back right now. And with the, by the way, just as a reminder that higher long end of the yield curve means inflation expectation and growth expectation. And the short end side, you could say like a rates expectation. So we all know that Fed's going to like reduce rates. Okay, that means like that's why there's a dispersion. Like I mean, the yield curve was inverted and it's normalizing right now, and that's the main reason. Like with Trump's potential uncertainties, those tariffs and stuff, long end of the yield curve is going up, but the short end of the yield curve is coming down, and this is normalizing. The economy is normalizing. That's a sign. So that's how I follow the XY. It's still in the uptrend. As long as the price stays above 107.35 levels, I'll be bullish on this, and I'll try to be more cautious, maybe with tight stops and stuff on risky assets. And what else? I also would like to show you, yeah, this all country world index ETF here in the daily chart. This is like you can Google this ETF that it has all like major companies from the world, and with the weighting that for sure US is the most has the most weight and stuff. So here you can see there's a head and shoulder top chart pattern is formed here, but this chart pattern also act as a head and shoulder top failure. In that scenario, we should follow this level, 120.20 level. So this chart is both bullish and bearish, but we need to monitor if this is going to break out, or it will come down and break down like this. That's what we should monitor. And the potential price target of this is I'm calculating like this. it's 5.7%, 5.7 from here. It's it's around there, 127 levels. So this chart is important as it is both directional. Look, what I'm trying to is not guessing a direction. So I have something in my mind, I have some narrative in my mind, there are some uncertainties. That's why I'm cautious to risky assets. And when I say risky assets, I go to equities. What could be the indicator of equities? All country world index ETF. I check technically, I see a chart pattern which might go both direction. Then what I need to do? What do I need to do? I need to wait and watch. I need to wait and watch to see which breakout or breakdown will occur. That's my mentality in trading in general. So apart from it, lastly, I would like to check gold. Quickly, where are we right now? Yeah, we all follow this. We all follow this monthly. Here also head and shoulder continuation. Sorry, monthly chart, and like this breakout, it's moving well. Like definitely long term, definitely there's a huge uptrend, and 10-week moving average is being challenged right now, and 40-week we're away. When we come to daily, you can see that we're still in the uptrend, as the red line 200-day moving average is carrying the trend. But as you can see, the price is currently the blue line, below the blue line, which is 50-day moving average. As you can see, there's a consolidation is occurring. It might act as you can call this as a symmetrical triangle chart pattern maybe, and that might also act as bullish or bearish. So it might break out or break down. So I'm following this like this. If still I still believe that for a long-term portfolios, with an environment that rates are coming down and with too much geopolitical tension, I still believe that any kind of decline in gold prices should be benefited as a buying opportunity with different levels. That's the long-term scenario. But technically, when you look at it, I'll be following this symmetrical triangle, this consolidation, this price consolidation to see if there's going to be breakout or breakdown. Yes, let me come back to my slides quickly. And the second chapter is about China's challenges and deflation, debt, and stimulus. So the chart that you see here is China 30-year bond yields. As you can see, it's a record low right now. So China's economy is facing headwinds with key risk for 2025, including deflation. Deflation means a stagnating consumer prices signal a weaker domestic growth. Second, debt issue. There are the construction companies issues. That was one of the major topic for China in 2024. Corporate and local government debt remain really high, limiting economic reform flexibility, and low bond yields, as I'm showing in this chart right now. Investor confidence is bad right now, as reflected in record low long-term yields. Institutions expect some significant stimulus measures to address these challenges, but the outlook for sectors reliant Chinese demand, like luxury goods, for example, you can trace Chinese demand through luxury goods sectors, and it's really pessimistic right now. This could particularly impact also European indices, because, for example, LVMH, a luxury stock. Luxury stocks, there's a substantial weight in European indices, and potential declining Chinese demand would impact there. So what might, first of all, first chart that I check when I check China is Hang Seng indices. Then the second one is generally AUDUSD currency, as China's growth is highly tied with producing. So that's why they are demanding Aussie to buy some like all like commodities and stuff from Australia. In that scenario, there's an increase in AUDUSD. So that's why I'll be checking that two chart. First of all, Hang Seng Index futures. Here with the first stimulus package, that was the main move that we saw. But if you ask me, this is in the weekly chart, if I see anything, any clear chart pattern, no, not yet. I don't see any bullish scenario here for now. And the only positive thing that I can tell is it's still above 200-day moving average, and we can say that after this huge move. Oh, sorry, I was showing chart, but I forgot to skip chart section. Sorry. Yeah, here I was talking about this chart. So here, this is Hang Seng Index. Hang Seng Index feature is China's one of the major indicators. So like I don't see any like definitely like a bullish scenario for here for now. The only positive thing, as I mentioned, this red line, 200-day moving average, is the price still above there. But I'll be following like this chart if we can see some consolidation around here. But for now, there is nothing certain. I mean, I don't see any clear chart pattern for a bottom reversal. Let me check quickly ACWI weekly chart. So, oops. Yeah. This chart, this trade idea was one of the trade ideas that I gave through Rationale newsletter. If you're not subscribed yet, you can subscribe from the link below that we provide. There are two links. One is for MarketsAll website. One is for Rationale newsletter that you receive like equities, trade ideas, FX trade ideas, cryptos, weekly and like random. So yeah, you can subscribe for free and get those into your mailbox. Here, as you can see, we would like to see some bullish scenario in Aussie in order to say that, okay, China might improve, but it's vice versa right now. There's like a weekly symmetrical triangle chart pattern broken down, pulling back right now, but the main trend is definitely down. So let me go back to slides. Yes. So the Federal Reserve and US economy, the Fed's focus in 2025 will likely shift to cautious rate cuts and balance sheet policy. Key highlights include, first of all, rate cuts. The Fed is expected to ease rates gradually with pivotal decisions likely in the first half of 2025. There are some inflation risks that has started, especially after Trump got elected, but also some data also supported that idea. But the last inflation data was like positive in terms of the improvement in inflation. So tariffs could lead some inflationary pressures, potentially complicating Fed's plan. And the balance sheet policy is one other important thing that we need to focus more. The anticipated end of like a quantitative tightening or end of reducing the balance sheet could provide a new bullish narrative for the markets. On the like a broader US economy, declining fiscal stimulus under Trump may impact like consumer spending. January's like bank earnings will be a key in terms of in order to see that to like a US consumption and stuff. So the next point that I would like to, by the way, sorry, before skipping that, here you see CME watch tool, and you can see that the current rate is 425-450 range, and it is expected that one or two rate cuts in 2025, as you can see, and no rate cut probability is 17%. But yeah, that's the current scenario right now, and you can like get this slide as a benchmark as it's the start of this year. With the upcoming data, if we can see some different action in this bar, you should be comparing with this, because so I mean at the beginning of the year with the projections that we received on December, this was the table, and this shifted this way, like on more hawkish or more bullish, hawkish or dovish way. That's how you can trace. Yeah. And lastly, I would like to talk about this technology, energy, and digital assets. Here you see crypto total market cap weekly chart. In December we saw this like a breakout, and like there's a clear uptrend there. So two key sectors expected to drive growth in 2025, like technology and cryptocurrencies for sure. So one is like AI and energy cost. That's important topic for this year, and it's important theme. So AI remains a high like a conviction theme, despite like a potential short-term earnings volatility. Institutions in generally see that like a long-term opportunity. It's not like, okay, let me buy now and just to see the impact. But there's another issue is lower energy cost, supported by nuclear power investments, like benefiting, like, because in order to build huge data centers, apart from space, you need to find the cheap energy. And the new like thing is not new, but the nuclear power might be a solution for this issue. That will be another narrative in 2025. And there are some companies like you can follow like URA, Uranium ETF, or Oklo is another company working on like a uranium, and like you can search those teams like that. Like also for data center investments that are related companies. In my next video, maybe I can do like some companies attached to those teams. For example, let's say software stocks, and like these companies, data centers, these companies. That might be good like a topic for the some other video. So in general, like this, like with nuclear power and AI, they generally like all these dynamics strengthen the bullish case for S&P 500 in 2025. And in general, institutions projected between 10% and 20% on the for this year. For the cryptocurrencies, the potential approval of additional ETFs for assets like maybe Ripple, Solana, there are like strong candidates. That might be a game changer, but still Bitcoin is the main focus, with the increasing like institutional adoption through IBIT, like ETF, expanding like blockchain users and stuff. In general, apart from that, another thing is another technology theme that might be important this year is quantum for sure. After Google released that the new quantum chip that computing everything way more faster, there are like some debates going on that quantum technology might threat blockchain technology. In that scenario, if this scenario strengths, that might offer some different pricing. But just let's check some like let me show you some ETF, some charts of QTUM, for example, quantum ETF, quantum related stocks ETF, and URA, uranium, global uranium miners ETF. And let's also cover Bitcoin chart before closing the video. So here, let's start with first QTUM quantum ETF. As you can see, with that narrative, we saw this movement in the weekly chart, still within the uptrend. You can call like this was the main cup with handle, and the potential price target of this chart pattern was 25. Like we're at there right now. This is like the chart pattern's price target, and as you can see around here there was a rejection to short-term moving average of 21-day, this black line, and we see some rejection from here. I believe that this is going to be consolidated around here while Trump's uncertainties is going on, especially in January. January might be might be a bit balanced month due to those uncertainties. But that's the main ETF that I'll be following to see if quantum theme is improving. And what else? The other one is URA, Global X Uranium ETF. And in the weekly chart, when you come there, there's a head and shoulder continuation kinda pattern is formed. That's how I'll be following uranium equities. So currently, let me see in the daily chart, it's just like struggling with this red line of 200-day moving average. But yeah, just first of all, I have a narrative that uranium ETF, like uranium might be main focus of one of the main focus of 2025. Then I come here, what kind of instrument might symbolize might be a good indicator for uranium. That's the instrument. Then technically, that idea, is that idea supported or not? That's the question I'm asking. And as you can see, a bullish chart pattern is also supporting this idea. And lastly, I would like to show you Bitcoin chart. Where are we and stuff? And yeah, after this huge breakout in the weekly chart, it was really like, it was very natural to see some pullback, and we're seeing right now. And currently I'm following in the daily chart this head and shoulder top or head and shoulder failure, as I showed you in all country world index ETF. So if we see a breakout like this on Monday 6th January 25, if we see a breakout like this, this is still on the bullish side, because then we can say that head and shoulder failure, head and shoulder top failure chart pattern is active. And with that scenario, in that scenario, the potential price target is around 116, 115 levels based on this chart pattern. But if we had seen a breakdown to come back here, come back here and break down here, then we would expect to go, let's say 15% down, which will be 78k USD levels. So here bullish scenario is active for me, and after this breakout maybe we can see some pullback, and this pullback might offer some buying opportunity with a stop around here, like a game plan like this around here, with like, let's say 3.2% stop loss level. That might be a good action. So yeah, that's I try to cover all like major themes going on right now, especially will be effective on 2025. I hope you enjoy whatever you see in this video. If you enjoy our like content, please like, subscribe, and also you can visit MarketsAll through the link below, and Rationale also from the link below the video. And if you have any question, please write down below as a comment. And thank you for your time. I wish you a great week.